Well, hello, Synergy community. It's Joe DeRaffaele, your host for our bi-weekly, or no, bi-monthly, I guess it would be. We do it every other week. Power 30 interview. And today we've got our local expert, our good friend, a key contributor to all that the Synergy community does, Miss Kari Phillips. Welcome, Kari.
Welcome. Thank you. How you doing? Hi, guys. Thanks for having me
Walking
on.
into the arena. Cheers. Here I am. That's right. How you do it? Cody obviously is here as well, along with a lot of other visitors and guests. For those of you that are new to this format, we do an interview series. If something kind of stands out that you'd like to learn a little bit more about, feel free to put it in the chat feature, and I'll do my best to work it in the conversation. If not, we'll definitely tackle it towards the end. So with that being said, let's get rolling, Kari. So we're going to get into you, the business and everything else, but I'd like to talk about you, the person. Like, start a couple minutes there. A lot of people do know who you are, but as with anything else, there's always more and more. The more that we learn about you, I think the closer we get. So I know you got a family. Tell us a little bit about your family.
Oh, I'm a mother of two little girls, 12 and 10, and Mika and Harper. They are athletes, and we are just watching them do basketball and volleyball as much as we can. I'm married to my college sweetheart, Kari Phillips. We had our 19th wedding anniversary last Tuesday. We both played basketball in college, so we really hope to have beasts as children so that they can dominate. He's 6'5". So I have an undergrad at Hillsdale College, small school in Hillsdale, and an MBA at University of Toledo, and I've been a lender since 1999.
99.
So 99, awesome. I can still say 99.
Well, I love the fact that you did it right before Y2K. So you survived that. You survived the collapse of the market. You're surviving the pandemic and thriving, and now we're into the next chapter of the market. Yep. By the way, I did like the video of your daughter catching the ball immediately, putting it on the deck, driving hard, pulling up, knocking it down. Boom, nothing but net.
I was super embarrassing. I think I cheered louder than anybody in the gym, but I don't care. I don't care.
It's all right. You're preparing her for when the crowd's going against her. She's uncomfortable with mom cheering. That's a good thing. So you've been through a lot in your, what is that, 23 years? Am I doing the math right?
Yeah.
23 years of lending. We're obviously seeing a little bit of a change in the market currently. And I'd like to get kind of your perspective of what's going on, not only with rates right now, because it's kind of been a little hinky in terms of the last month and a half, but what do you also expect to see going forward?
Yeah, so I found this really good graph that I thought I'd share just to start us off with that conversation. Historical interest rates for 30-year over the last 50 years. Can y'all see that?
Yes.
Okay, so people are saying the sky is falling because interest rates have increased over 200 and almost 250 bips since January 6th. So from January 6th to the end of June, 250 bips. But
hold on. Let's remember, we've got people that don't know what bips are.
So 250, it basically used to be 3.75%, or it rates in the threes, and now they're in the fives. So 250 bips is about 2.5% rate, okay. Right? Okay. So but you'll see in this graph, we're still in the third lowest interest rate atmosphere in a 50-year history. So I say that is to be able to tell your clients not to freak out. We're still in a low rate environment.
So the sky's not falling?
Sky is not falling. And I was reading this morning that we've actually decreased rates since the end of June to now, 100 and over 120 bips. So over 1% interest rate. It used to be 6.28, and now it's closer to lower fives. So in the last 30 45 days, we've actually done a decrease. So wanted to note that. Now let's talk about the next 90 days and what that looks like, because that's what I think people are most curious of. It's hard to say with everything that I've read, probably 10 different articles, but we're going to have an increase. We're going to probably be in the low, really upper fives, lower sixes. From where we've been, it dependent also on 24 factors of a client. I'm quoting rates right now, but just know if your client has a lower FICO score, that's going to be higher. If they're buying it as an investment property, the rate's going to be higher. So this is really based on a primary residence, good credit borrower. So next 90 days, so over August, September, you can see it's going to inch up slightly.
Yeah, but that's very moderate, right? I mean, I like the graph you showed earlier. I wasn't in the real estate business back when the rates were in 16 to 18%.
Me neither. This is that graph.
When I got in the mid 90s, 94, I had a lot of the old veterans were telling me, "Oh, kid, you got it easy. Remember back in the day, we had to, these things at 16, 17%. But I remember we were high-fiving if you got anything under 8, if you got a client anything around 7.75 or things of that nature."
Yep,
So,
94, it's right above in the mid 8s. So you remember that well. I remember when I locked in at 7.375 and I was like, oh yeah, like we're in the money.
Killing it.
We're awesome, right? So
you had a quote that you shared, gosh, I don't know if it was a couple of weeks, maybe it was a month ago, something about marry the house, date the rate. What was that?
So marry the house, date the rate. Basically, just get into the house. You're going to marry this. You're going to be there forever and ever and live in bliss. And you're going to be in there for the long run. But you're only dating the rate. You're good. That's temporary. You can get in, and in a couple of years, 3 years, 4 years, which has always happened in the last 23 years, we've had 3 rate increases that are pretty drastic. Within the next 2 to 3 years, we've always had a refi boom. I can't say for sure it's going to happen, but that's been my 23-year history. Just get in as a Band-Aid, date it, and find a new beau or gal in 3 to 4 years, 3 years.
So how do we combat the slowdown in buyer demand because of some of this, somewhat rate uncertainty, rate unpredictability, that kind of stuff as we move forward?
Yeah. So ARM is not a dirty word. I think we need to embrace that. That's exactly what adjustable rate mortgages were created for. An adjustable rate mortgage is, let's say it's a 5/1 ARM. The rate is locked for 5 years, and then afterwards it adjusts once a year. So, but if you've got a client and they're predicting that they're going to sell or refinance within the first 5 years, which by history, that is the normal human behavior, is to do something within the first 5 years, whether you think you're going to or not. If we're talking about the median sales price in Las Vegas, for example, you're going to save $300 a month just by doing an ARM, because an adjustable rate, a 5/1 ARM in particular, is about 1% lower than a 30-year. So that's an idea. We at Guaranteed Rate, we just came out with what's called a 2/1 buy down, which is fabulous. It's and not every lender does it. I'm super excited that we have it. But sellers are willing to pay closing costs now. It was a foreign thing 5 months ago, 4 months ago, probably 4 months ago, even before then.
The last year and a half, it was try to get a seller to do anything. You're lucky if they'd put a new light bulb in on a burnt out one.
Well said. That's exactly right. Well, now they are willing to pay closing costs. And in this 2/1 buy down, let's say you locked in your rate, the lender locks in your rate at 6%. I'm just putting that out for easy figures. The first year that the client pays the payment, they are going to be locked in at 4%. So 2% below the approved rate. Let's say that saves the client $300. So in the first year, the cost savings is $3,600, right? So second year, the rate will then go from 6% to 5%, or they go off the original rate lock and they decrease it by 1%. So either the client's going to pay 5%, which let's say that saves about $150. So in that year, $150 times 12 is $1,800, right? So total cost in this scenario is $5,400. That has to be paid up front on the settlement sheet at closing. So what sellers are doing is they're advertising that they'll pay $5,400 in closing costs, or $6,000 towards closing costs. That is better than if they were to just buy down the rate of the borrower, because you get a bang for the buck, but not as much of a bang for the buck on a 2-1 arm or 2-1 buy down product. So
Kari, I'm going to jump in just for a second
Yeah.
here. And the reason why is this conversation can get a little heady. What I want to boil it down to is, for everybody that's listening here, the opportunity for you is to connect with Kari so that she can help you get buyers into homes at a much more affordable way. And she's got multiple options on how to do that. Would that be a fair way to summarize the different buy down, 5-year, 1 year, 2 buy down from the seller and all that? Not to say that that's not technically important, because I think it is, but I think the message here is it's not a one size fits all. And quite frankly, most lenders don't even know what you're talking about right now. They just know, we got this 30-year product and this is the rate.
Right. And that was getting a little bit detailed, but I think what you just basically need to know is sellers can give contributions to really get the payment down for the client in a bigger way than what is the norm, which is buying down the rate. Okay. Also keep in mind that we have an equity line of credit product that we can fund in 5 days. So from the time that they do the application to funding, which helps people that have a bunch of equity on their current house and they want to take cash from it to put a down payment on the next house to lower the payment, lower their loan amount, but they're scared because they think that they've got to do a full refinance. Well,
so if they're sitting on one of these incredibly low interest rates, 3.5 down to 2.5 or something like that, they don't want to give that up, and they've got a lot of equity, they can still acquire another property, and you can help them with a home equity line within 5 days ish.
It's nuts. Yeah. Let's say it's a whole 7 days if the client, it takes but
got to take a weekend.
Just know that is there too. And most banks take, 45 to 60 days to do the Helocs. If you need something quick, it's there.
That's great. Boy, talk about the ability to take advantage of opportunities. I wanted to talk about one of the recent deals you and I did, where you had represented a few mutual business acquaintances of ours, Lindsay.
Oh, yeah.
In the community. First of all, the kudos that I want to put out there is you beat all the timelines that you quoted, which is not the first time you've done that for one of the clients that you've done that for me on. You were way early, and we were able to close early, which is like almost unheard of. Typically, the typical phone call that I get called from a lender a week before closing is, we need more time. And you called me and said, we can close anytime. That was phenomenal. But I want to talk about the phone call that you made. We knew that we were up against a cash buyer, and we were getting a loan. And I'm, of course, talking like up how great our buyer was. Then I called you and I said, hey, Kari, how can we convince this agent that we're the reason to do it? What did you do?
Well, I asked the buyer's agent to send me the contact information to the listing agent so that I can call. They can hear it kind of from the horse's mouth, to let the seller know or the seller's agent know how well qualified that borrower is. We put all of our files through full underwriting before they're in contract. So it's very easy for me to say they're fully underwritten. All we need is an appraisal, and we can close. So I want them to hear that from me, so they know it's the truth. Being here, so I've done this for 23 years, but I've been in Vegas for 20 years. About half the time I know the agent. So it's kind of fun to oh, Joe, we're working on another deal together. Here we go. And just know we've closed a bunch before and you know that this is going to close. So that sometimes helps. But
Well,
I
you've
think
done that with
also,
me. When
yeah,
I'm
what?
on the listing agent side, and then you're like, hey, I'm repping the buyer on this. I'm like, okay, there's some points for this buyer.
Actually, I think I say Joe and like knock it off. Well, you're accepting this. Like it's a done, like, let's go. Come on. But I just, I think that call also makes us not look flaky. Like, I don't think every lender calls, I've seen some buyers agents just email over the, contract for their offer. There's the little things matter, to set yourself apart. And I do think that's one of the things we can help with there.
Well, I love that. I got the phone call from the listing agent saying, whoa, that lender just like is on it. And I'm definitely telling my clients that this is a rock solid deal. So I love that, the fact that you're willing to take that time to make that phone call to help support the agent to get the deal on. That is phenomenal.
Yeah, and even if it's Saturday, Sunday nights, guys, I think that actually makes us look even more on top of it. If it's like Sunday afternoon and people are, oh, the lender's supposed to be taken off. No, send me that, because that is just one additional thing to highlight. Hey, this is going to be different. Just know we're on top of it.
It makes a huge difference. I love that. So one of the things I wanted to transition into was, you're turning files quick. Like I mentioned, you called me and said we can close anytime. And there's obviously something you're doing. I remember you saying something about wise approvals, but what are you doing different than other lenders?
Well, that's a biggie. We're putting basically the client through full underwriting before they're in contract. So we're doing a lot of the work. We're collecting all the documentation, which takes time, right? If you're in contract, that takes time. Now we're just doing it beforehand. But a lot of lenders are loan officing teams. I have my own branch. I have my own, what we call a pod. It's basically my team, my processing team, and my sales team. Many of the loan officers out there are letting go their processors, and because there's just not as much volume. There's probably about 30% of the volume that we had a year ago, right? I'm keeping the same team intact because yes, they're doing less volume and they might be sitting around a little bit more. But in my opinion, I want things to move even that much quicker to gain that much more speed. And we're going to pick up again. So I don't want to let go a team and then have to hire back a team. It's just a mess. For me, it's not worth it. So I've just got a team just waiting around wanting loans. I mean, they're begging, Kari, get another loan. So it's just, that really helps.
Talk about a big separator, right? When the rest of I'm a big 180-degree theory person, right? So whatever the crowd's doing, you got to go the other way.
Mm-hmm.
It's going to be where the right way is. So when you're telling me that most lenders are letting go of their processors, I think it's pretty short-sighted because the quality of service is going to drop. Whereas you're saying, nope, we're not changing that. We're just going to figure out how to be more creative. And obviously with some of the programs you just talked about, that is a difference maker. So I love that.
Yep.
So does it really matter to have an experienced loan officer? What about, somebody's friend that, is just kind of doing this on the side while doing hair or bartending or, whatever else they might be doing?
Well, I mean, I have always believed in experience. It really matters. Like we had a client come to us. It was a fallout of another bank. And they said, this self-employed borrower, their income decreased from 2020 to 2021. And because I had that same scenario happen over the last years, where you have to isolate, like what happened in 2021 that lowered the income, called the borrower and said, was there something unique that happened that really would say to an underwriter, this isn't going to happen again. This was something weird that happened that year. And lo and behold, he bought a commercial building. Well, you're not going to buy a commercial building every year, right? So before it was sent into underwriting, I said, let's get a letter of explanation from the CPA. Let's have the borrower write it up. We actually submitted it, and the underwriter came back and said, wait, I don't like this declining income. And because I was able to say, listen, I've gotten this done 20 billion different times. Did you see the letters in there? And she pulled it and said, whoa, I didn't see this. That makes total sense. We got it approved. We got our clear to close actually today. But I think that because the more loans you do, the more practice you get, and the more, if that happened 15 years ago, I would be that lender that said, sorry, can't do it. But because it's happened to me lots of times, I know what can get done and what can't. So it obviously made a difference there.
Well, the underwriter's job is to be as conservative as possible, right? Right? I mean, they're going to push
They have to follow
back.
the rules. They have to follow the guidelines.
Okay.
Yep.
That's a nice way of saying that, they're going to enforce this line. And your job is to be the advocate for the client to make the argument and to prove and put the documentation to say, hold on a second. Yes, that's the rule. However, we also have to consider this. And that is seasoning.
Well, and if you've had it where it worked before, I just go into that conversation so much differently with the underwriter. Like, no, you're wrong. And here's what, you say it nicely, but here, hey, I've gotten this done before. They see your track record, and it goes a long way to have that confidence, behind you.
So was that one with the building purchase? Was that the TOF? Was that the?
Yeah.
Yeah. Okay, great. Yeah, I remember hearing that.
Yeah.
So excellent. All right. So what's the most important factor in referring clients to lenders like you? Is it the rate? Is it the cost? Is it service? What typically matters most, in your opinion?
So I'm going to be biased here. So I don't think it's fair for me to be the one answering that. So maybe I can lean on my friend, Mr. Lewis.
Oh, bringing in the big guns here.
Oh, sure. I'll throw it.
I put you in out there. Sorry.
So, yeah, I have found now that working with people who know what they're doing is the least cost to the client. I don't care what it says on paper. End of the day, it's the least cost to the client. So I had a situation once where this client was going to be saving like 0.1%. We were definitely just a number to that lender. We didn't hit the close date, and that client, because we didn't hit the close date because of their lender, lost his earnest money. Did he save money? At the end of the day, did he save money? I just think that, generally speaking, I look for a low cost provider. So generally speaking, this is why I work with Kari. Generally speaking, she's a very low cost provider. Is she always the absolute lowest? Like if you search for a month, would you find something that's like a little bit better pricing? Maybe, and probably, but that I just don't think pays. I just don't think that really is beneficial to the client in the long run. And I've heard Kari explain an ARM before to a client, and it's great. And there's a good reason to use it sometimes. So that experience matters, I think.
That's outstanding. And I would agree with you. And typically, at the end of the day, what price can you put on a seasoned veteran, right? Like somebody that's been there, done that, especially in transitioning markets that we have right now. So there was a question in the chat earlier, so I'm going to circle back to it. Then I think Cody had jumped in and kind of clarified on the Heloc. Doesn't the Heloc count against the buyer's ratio? Now, my take on it is this. Yes, however, it's also more cash that you're putting in towards the new loan, so it somewhat balances out. However, I'm going to defer to you as an expert. How would you answer that question?
Yes, it does. So, we just had a client that took out a $350,000 HELOC. He was buying $1 million house. No, 900 and some odd $1,000 house. But because he was putting that much more down and he was getting under jumbo loan amount, that ended up saving him a little bit of money on the conventional side there, so it all balanced out. It's really, and if a client doesn't need all 350,000 of a line, then I'm going to bring down the amount of what they really need. So I don't have to, because when you're hitting them with debt to income ratio, you're using the whole line amount. I'm going to just have them condense it to what they need. And usually it's a very little payment that I've got to add to their ratios.
Excellent. So that clarifies that. Thank you very much. So Kari, what's the best way for somebody to connect with you, to like, I'm hearing this interview for the first time. I've heard good things about you. Maybe I've met you at one of the many things that you will contribute to the Synergy community at. What's the best way to connect with you?
Well, I'll put my cell number in the chat. I also have a 301. What is my cell number there? I also have an app in the App Store. It's the Kari Phillips mortgage app. You just you download that, and that will have, you know, a way to refer clients. It'll have marketing, but on there is also an icon that says contact Kari, and you press my face like that on the icon, and it just dials right into me. So that goes right into my cell. And you can do this to my forehead.
If I'm having a frustrating day, I can get that app out and just keep.
I'm gonna call Kari.
And Cody, if you wouldn't mind keying in the location of that app, that'd be great to help me out. All right,
Yeah.
so I want to kind of bring this together, tie this together in terms of a summary. So for me, the value in relationship, right? Relationships, when times get tough, you find out who's there and who can back you up. You've been through the market 23 years. You've ridden this roller coaster multiple times. Now, just from your worldview, how can you encourage and support the agents that maybe have not been through something like this? You've been through market transitions. What piece of advice would you share with them?
I'd say that the sky is not falling, and that it gets better and better. When you have kind of a rough moment, it always comes back. It's not like it's going to stay this way for a long period of time. You have support, you have marketing support from me. And anything you ask me, I'm going to be transparent about. And this is a good and bad thing, but I'm very direct. I'm not going to waste, you know, your time. I'm not going to tell you crap that I'm not going to tell you crap that I think you need to hear. I'm just going to be very direct. So just know that there's a lot of great agents, and you have really good teammates here that have been through a lot of rough times and good times. And I think also leaning on, you know, leadership is a really good, gosh, this group, I'll tell you, it's the best group in Las Vegas that I've ever been part of. So like, I work with big, you know, lots of big teams. There's no comparison between what Synergy does and what the other groups do with consideration of support and keeping up on the times and being available and having rock stars that are veterans in this industry. So I think you've surrounded yourself with the best team out there that you could possibly surround yourself with.
Well, I appreciate that. And yeah, I would echo your sentiment of no matter how difficult it might appear, it's not forever.
It's not forever.
And go ahead.
There's things that will help fix the problem, like these products, like getting support of how to write up contracts by getting seller contributions. Like there's little things that you can do to get advice from people that have been through it before, like a Joe D, like a Cody Lewis. There's lots of people on this call.
So I would say for everybody that's listening to this call, having a veteran lender relationship with somebody knowledgeable, skilled to navigate transitioning waters is absolutely an asset. And when you're meeting with a buyer or even a seller and selling them on why choose you, I know for me, I will bring up Kari and talk about how this is how we separate. This is how we make sure that when we go into escrow, that we are going to see it through because everything's been checked beforehand. I love the fact that you do the pre-underwriting and everything else so that we know when we put a buyer in our car or we take them out to see one of our listings, whatever it is, that we know, hey, this person has the ability to perform. So kudos to you. Any last closing thoughts from you that anything that I didn't bring up that you'd like to just share, or are you in a good spot?
I think we've covered a lot of it. I think we're going to end on time. It's 10:30 exactly, 10:31, and just thanks for having me on. You guys are awesome, and I'm just really grateful that I'm even standing next to you guys.
Well, I will say from my perspective, thank you, not only for being a guest today and sharing with us the different options you have, but thank you for who you are, the way you show up. You're always 110% whenever you get involved with. I love it. I know I can count on you for my clients. I don't concern myself from the moment I make the handoff. I know they're going to be well cared for, and that makes it better for me and my business, so that I'm not worried about one more thing. You know what I mean? And so just keep being a rock star that you are. And I look forward to more videos of your daughters banging in the post, throwing elbows and knocking down Jays and grabbing rebounds. So
Thank you.
all right, for everybody in Synergy, I'm going to leave you one little parting thought. Markets transitioning. You have a choice as to how that's going to go. The choice is totally up to you. You can succumb to the bad news and the challenges that the woe is me that the media is going to sell you on, or you can buy in that you do your job today and you surround yourself with other quality people that are getting after it, and you will find opportunities. Everybody, keep kicking ass, and we'll talk to you soon.